Alexander Forbes released its full-year results today with a 10% increase in operating profit from continuing operations. While the company's chief executive, Edward Kieswetter, is with us to unpack these numbers. Edward, thanks for your time coming in, although that you are battling the cold. But you certainly weren't battling at this time. You did say the 2014 and 2015 year can be characterized as a year of transition. Just take us through that.
Well, absolutely. So just to remember, we came from being privately held and then listed the company in July 2014. And along with that comes internal challenges, just keeping the morale. When we're in transition, generally people sense uncertainty. And we had to do that whilst crunching the numbers in order to make the right decision for the company. I think the transition, together with all its attendant executive effort, but also the cost of that, when we look back and look at the results, we feel quite pleased that given that significant transition, returning to the stock exchange, we were able to post a credible set of results, which, as you mentioned earlier on, is 10% on trading profit. I think what's really, really pleasing for me is that that comes off solid growth, top-line growth from most of the businesses, as you will see in the detail. And then in terms of the drivers for growth, again, that gives us the confidence that this growth has sustainability, it has annuity effect, because it is about members under administration for us. It is about gathering assets under advice, assets under management, and assets under administration, and about gross written premium in terms of our core businesses. And all of these indicators are, for us, fortunately and pleasingly, pointing in the right direction.
I think, yeah, a very decent set of results. Congratulations. I think you guys are doing a great job. I mean, obviously a little bit difficult to compare, one's set of numbers with the other. But maybe if I can ask which direction, I mean, you've mentioned before that you're pushing more into the retail business. Maybe just a bit of color around, that initiative. And then also maybe, the market obviously is trading, fairly high at the moment. I mean, like you mentioned, a lot of annuity income that you guys generate, a very good cash generating business. But what about the more, market linked businesses? I mean, do you see, I know Coronation is getting a lot more defensive in their strategies for clients. I mean, you guys, do you see a market sell-off at this time as a significant risk to your business?
Let me answer the last part first. So, absolutely, we have exposure to the equity markets, but I just need us all to be reminded that this is a limited exposure because of asset spreading requirements. We have an exposure normally in the mid-50s to the equity markets. But in terms of our benchmark performer portfolio, there we really have, if you look at the large manager watch, we're pretty encouraged that we have, in 71% of our portfolios, we have exceeded the large manager watch. So yes, we are exposed to the equity markets, but our exposure is unlike some of those who have full exposure to it. But yes, I think it's something that we watch all the time. In terms of where we're going, absolutely correct. Our low-hanging fruit, the big thing we've punted now since we've come back to restructure the organization, is about driving the retail. And that means selling directly to individuals. And for us, what we have done is, and we'll make the announcement also publicly, is we've reorganized ourselves around that strategy. So for the first time, we have a retail cluster alongside an institutional cluster. And so, human behavior is strange. When we try and get people to collaborate simply, it's always harder. We have now allowed structure to follow strategy, and we are very confident. But even if you look in this transition here, if you look at the drivers for growth in that area, assets under management and under advice for the retail was 17% up. Assets under management over 14%, and assets on our platform over 14% growth. So solid growth from those areas. In terms of our Paka retail business, which is the short-term insurance business, there we have seen 11% growth in gross written premium. And if you look at the last 3 years, that's in fact a 15% CAGR over the last 3 years. So again, solid performance. We believe that now we have traction. We've made the investment this year, which also somewhat attenuate our retail trading margin, but we are confident that the investment we're making will bear fruit in the long term.
Edward, being in financial services, we have to talk about regulation. There's been a lot, RDR, treating customers fairly, Poppy. How has this impacted you, and what are you doing in order to position your business so that this does not impact you negatively?
I think the impact is significant. And we continuously engage with regulators to help them also understand the unintended consequences of regulation. First of all, the cost of doing business increases significantly for in our case, over the last few years, more than 30% on an annual compound basis of growth just for compliance. But that being said, we do believe that the intent of regulation is good and right. It strengthens the sector. And what we have done is ensured that the way we implement Poppy TCF strengthens the whole of our business, helps us understand our own risk better, so that we also gain from it commercially. And we don't just simply follow a minimum compliance approach.
Well, Edward, unfortunately we'll have to leave it at that for today, but thank you so much. Best of luck with the roadshow, and congratulations on a good set of results. That was a big thank you to Edward Kieswetter. He's the Chief Executive of Alexander Forbes.